everyone, welcome to GBRC College video lecture series. In this video, I am going to discuss the contemporary issues in accounting subject for MCOM second semester students. In that, I am going to discuss the fifth chapter, that is creative accounting. So, let us discuss in this video the introductory part and definitions, meaning and definitions of creative accounting. Let us discuss the introductory part of creative accounting. So a term, the creative accounting, the term or a term used to describe the practice of applying inappropriate accounting policies or entering into complex or special purpose transactions with the objective of making a company's financial statements appear to disclose a more favorable position, particularly in relation to the calculation of certain key ratios. Okay, see, one of the problems of accounting problems is not the non-availability of solution to the problems, but the availability of more than one solution to each of a few major accounting problems. Okay, inventory valuation, annual depreciation, accounting treatment of goodwill, overtime premium, okay, idle time cost, research and development cost, etc. are some of the examples for the accounting problems with alternative solutions. Okay, so what is more important is that these diverse accounting treatments are considered as based sound accounting principles and as sound accounting practices by the professional accounting bodies. Okay, so these diverse accounting treatments are based on the sound accounting principles and as sound accounting practices by the professional accounting bodies. Further, the corporate enterprises are allowed to use any of these accounting methods. Okay, so these diverse accounting treatments are acting as the avenues for a few industrial enterprises to manipulate their financial results and financial position. Okay, so another important problem that is for a few emerging accounting problems, there is objective and generally accepted accounting solution. In other words, for some accounting issues, no single generally accepted solution is available. Am I right? Yes. So that means there are few suggested methods as to how to account for certain new kinds of accounting problems. Okay, so consequently the corporate enterprises which have the freedom to use any one of these suggested methods can manipulate their accounting figures to suit their requirements. As a result, the users of accounting information and reports, more particularly the external parties, are deprived of objective, comparable and reliable information. Okay, so it's very well known that the financial reports which comprise of among others the financial statements. What are the financial statements? That is profit and loss account and balance sheet are expected to possess the valuable information content. Yes, so these reports should be contain relevant material and objective facts and figures. Okay, this assumes that importance, as most of the users of annual reports, more particularly the external parties, are not in a position to find out whether any information in the report is distorted by the companies intentionally. Okay, and the term creative accounting, which is used to describe the practice of applying of that inappropriate accounting policies are entering into complex or a special purpose transactions with the objective of making a company's financial statements appear to disclose a more favorable position. Okay, so the financial statements, for what reason we are preparing the financial statements? to know the financial condition, to know the financial results, or to know the credibility, or to know the financial performance of the company. Okay, so it is more favorable position, particularly in relation to the calculation of certain key areas. Okay, so next I'm going to discuss the meaning regarding this creative accounting. So in this video, so next I'm going to discuss that definition, meaning, and as well as definition regarding this creative accounting. It is a process whereby accountants use knowledge of accounting rules to manipulate figures reported in the accounts of a business. Okay, so according to Blake, Amat and Dodds in the year of 1998, so they are defining like this: a process, the creative accounting is a process whereby accountants use knowledge of accounting rules to manipulate what? Figures reported in the accounts of a business. Okay, so another definition is given by the Kamal Nasser in the year of 1993. So that is transformation of financial accounting figures from what they actually are to what prepares desired by taking advantage of existing rules and or ignoring some or all of them. Okay, so according to the Kamal Nasser, they are defining like this: transformation of financial accounting figures. Okay, it's a transformation of financial accounting figures from what they actually are to what prepares desired by taking advantage of existing rules and or ignoring some or all of them. Okay, so one more definition is given by that Kamal Nasser, so in the year of 1993 also. So it is a process, the creative accounting as the process of manipulating accounting figures by taking advantage of the loopholes in accounting rules and the choices of measurement and disclosure practices in them to transform the financial statements from the what they should be to what the preparers would prefer to see reported, and the process by which transactions are structured so as to produce the required results rather than the reporting transactions in a neutral and consistent way. Okay, see this one more definition is given by Kamal Nasser, that is, it's a process of manipulating accounting figures by taking advantage of loopholes in accounting rules and the choices of measurement and disclosure practices in them to transform the financial statements from what they should be to what the preparers would be preferred to see reported, and the process by which transactions are structured so as to produce the required results rather than reporting transactions in a neutral and consistent way. Okay, so creative accounting is also defined as the one of which makes use of regulations to escape from regulatory control without actually violating the regulations. See this one more definition is there, which makes the creative accounting which makes use of regulations to escape from what? Regulatory control without actually violating the regulations. Okay, and one more definition is there: accounting methods. The creative accounting as a one which makes use of accounting methods which, though not illegal, aim to creating a position of profitability or financial position which is totally valid but either illusory or misleading. Okay, so these are the definitions regarding this creative accounting. Remaining part of this chapter I will discuss in next video. Thank you for watching.